Today, the world is holding its breath. We are seeing some of the most intense geopolitical tension in years as Vice President J.D. Vance leaves Islamabad after peace talks with Iran ended without a deal. At the same time, we are looking at an XRP chart right here. All right. We are looking at an XRP chart right here that is fighting for its life at the $1.32 level. Is the failure of these negotiations going to send the entire market into a tailspin? Or is the XRP ledger showing us signs of diamond hand strength despite the bearish candles? In this video, we are breaking down the technical indicators, including a very interesting shift in the Halsut indicator right here and a complete blackout on our QQE Mod indicator right here. I am also going to give you my personal opinion on why this final and best offer from the US might lead to a final and best buying opportunity for us. So let's look at the data. So what does a flat Halsut mean at the $1.33 price level? Currently, XRP is trading at $1.3305 right now. If we are going to look at our Halsut indicator right here, it is still red and it has been curving downward, which usually means the bears are in control. However, we are seeing something very important today. The curve seems to is starting to go flat. So let's zoom it in for a much better view. Can you see? Can you see the changes? In my own personal opinion, in my experience, a flattening Halsut indicator after a long downward curve is like a car slamming on the brakes. The downward momentum is losing its oomph. To me, this suggests that the market has already priced in a lot of the bad news from the Middle East. We are at a point where the sellers are exhausted and they are waiting for a new reason to either push lower or finally reverse. In my own technical perspective, we have a major resistance way up right here at a price of 1.5672. It's right here. It's a major resistance level. But we have much closer hurdle. We have much closer hurdles to clear first. And these are our minor resistance sitting at 1.3833 right here and 1.4371. Because the Halsut seems to be flattening, we need to see a green flip to even think about testing 1.38 right here. Until then, we are in a high-risk consolidation zone right at the edge of the support line. So, is the 1.3211 support level right here the line in the sand? This is the most critical part of the chart right now. The price level of 1.3211 which used to be a major resistance, has been broken again and it is now serving as our current major support. Looking at the candle, let's zoom and let's look at the candlesticks that has been formed, particularly our candlestick yesterday and our current candlestick. We can notice that our yesterday candlestick have formed a bearish candle with a very small body, and it consists of long wicks. Today's candle is also bearish, and it is currently sitting just above the 1.3211 support line right here. In my own personal opinion, these long wicks right here from our yesterday candlestick tell me there is a massive tug of war happening. The long wick on the bottom right here means whenever the price drops toward $1.32, buyers are stepping in and pushing it back up. The bearish candle today shows the pressure is still there, but the fact that we have not crushed through $1.32 yet tells me this price level is being defended heavily by institutional buy walls. In my technical perspective, if 1.3211 fails to hold, we have a liquidity gap down to the next major support at 1.2234. It's right here. That's a 10-cent drop that could happen in a flash. However, as long as we stay above $1.32 right here, this is what I call a stress test. If we survive this bearish candle today, the springboard effect for a relief rally becomes much more likely. So, let's also check and talk about our QQE Mod indicator right here. The question is, why has our QQE Mod indicator right here gone blank since April 8th? This is one of the strangest things I've seen lately. The QQE Mod indicator has formed blank or no bars from April 8 until today, April 12. In my own personal opinion, when a momentum indicator like the QQE Mod goes dark or blank, it tells me that the market is in a wait and see mode. There is zero conviction from either side. The smart money is literally sitting on their hands, waiting for the news from Islamabad or the Strait of Hormuz to clear up. This silence is often the calm before the storm. Usually when the QQE mod starts printing printing bars again after a gap like this, the move is explosive. In my own technical perspective, a blank QQE mod combined with a flattening hull suit suggests we are at the apex of a volatility squeeze. We are waiting for a volatility trigger. The technical structure is called tight, and whatever direction we break, it is going to be a large move. So, how do failed peace talks and Strait of Hormuz impact global liquidity? The news today is heavy. JD Vance left talks without a deal in Iran is warning of a strong response if military vessels transit the Strait of Hormuz. In my own personal opinion, this is exactly why the QQE mod is blank. Markets hate uncertainty more than they hate bad news. The Strait of Hormuz is a massive choke point for global energy. If that waterway sees conflict, oil prices spike and usually risk on assets like crypto see a temporary dip as people move to cash. However, I believe XRP has a unique safe haven potential. I believe that XRP has a unique safe haven potential because of its role in cross border settlements that must happen regardless of war. And my own technical perspective, in a wartime scenario, we often see a flash crash followed by a V-shaped recovery. So let's go back to our chart right here, which is our daily chart time frame. So if the $1.32 support breaks because of a headline, I'll be watching the $1.22 support right here. It's $1.2234 to be exact. History shows that these geopolitical dips are often the best accumulation zones for long-term holders. So what is the game plan if the peace talks don't resume? Iran says it's natural that no agreement was reached in a day, but the US has put forward its best and final offer. So in my own personal opinion, I think we are looking at a period of high-level standoff. This means the market might stay in this $1.32 to $1.38 range for several more days. So my personal strategy is that I'm not shorting here. Why? Because our halted indicator it seems to be starting to go flat at major support. That is a dangerous place to be a bear. I am looking for a QQE mod bar to print blue or for a bullish hammer candle to form right here at $1.32 support. Overall, it's a crazy time to be a trader. We have war headlines on one screen and technical support test on the other. But remember, fortune favors the disciplined. So let's watch the 1.3211 major support. Watch the hull suit for that green flip and stay safe out there. And this finally ends our video. Thank you very much for watching and see you on the next one.